Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with the Bank of Korea and its decision on interest rates coming up tomorrow. Looking at a variety of factors domestically and in the global economy, it is widely expected that we'll see another big rate hike of 0.5 percentage point. What do you think is the likely outcome for the BOK, and why?
Yes, if you look at the BOK, it is expected to do another big step hike, which is about 0.5 percentage point in its next meeting on Wednesday. The reason for that is because obviously to fight the inflation and also prevent the possible capital flights. If you look at the foreign exchange reserves, we saw quite significant decline to 416.77 billion US dollars in September from 436.43 billion. If you look at the current account numbers also, it posted a deficit of 3.05 billion in August, clearly turning negative territories. Clearly, if we look at a lot of the prices, it is showing quite a bit of increases because of the currency changes, and also the energy prices are rising quite rapidly. If you look at the crude oil prices, still at well above $80 per barrel. Right now it's at about 90. So a lot of people are uncertain about what might be happening in terms of the cost of the import. I think it is affected by the weak currency as well as higher energy prices, and is causing the inflation to be quite high. And also, if you look at the Korea's interest rate environment, it is at 2.5%, which is well below 3.0 to 3.25% of U.S. interest rate, and it is expected to be risen to 3.75% in November 2nd. If that's the case, the gap is quite significant that continuation of the capital flight might be happening. That is the uncertainties. However, though, we don't think that the overall BOK rate hike will be as significant as the U.S., given the fact that the consumer debt leverage is extremely higher. And in terms of the maturity cases, it is much shorter term in Korea, and therefore raising interest rate to the stronger speed as U.S. does, that will cause quite a big of uncertainty right now. So I don't think that the Fed rate hike of 0.75% will be translated into quite significant level of interest rate hike in BOK. But nevertheless, we will see BOK raising interest rate in order to fight inflation as well as the overall interest rate differentials.
Well, now turning to the markets, U.S. stocks were down again on Monday ahead of data due out this week on inflation and earnings. JPMorgan CEO Jamie Dimon saying he sees a recession in the U.S. in 6 to 9 months. The Dow off by about 1/3%, S&P 0.75%, Nasdaq about 1%. What's the story in the global equity markets?
Yes, clearly quite a lot of uncertainty lies around. Given the fact that the Fed is raising interest rates such a high speed than most of the other economies, even though the U.S. has one of the highest level of debt to GDP ratio in terms of the government debt. If you look at the Dow, it fell by 0.32%, S&P fell 0.75%, Nasdaq dropped more than 1% at its lowest level in over 2 years. As you said, the JPMorgan CEO Jamie Dimon have warned that this kind of rate hike will cause the global economy, including U.S., to fall into recession, and that will cause about 20% decline in the equity prices that is expected. In terms of the futures market, it seems to be quite uncertain. Of course, there's a lot of the news coming out from what Fed's chairmen are talking about. The Fed Reserve Vice Chair Brainard supported the idea that the cautioning in terms of the rate hike to the speed too significant, causing the global economy to be uncertain. There's quite a lot of news coming out from Europe and saying that Fed raising interest rate to this kind of speed is too much to handle for the global economy. So we'll have to see what kind of interest rate hike is expected in the November 2nd. Of course, we are expecting the inflationary numbers coming out for September figures quite soon, this week on Wednesday. Looking at that and see how the Fed will change or whether continue to keep on saying that kind of high-speed interest rate hike. We think that the level of interest rate hike cannot be as significant as before. 0.75% if they do raise it. This should be the last time of that kind of giant step rate hike. After that, we think that the level of the interest rate hike will be slowing down quite drastically, given the fact that a lot of inflationary pressure and economic slowdown is expected. We are seeing a lot of numbers are coming out, including the PMI numbers and global numbers, all indicating that slowdown is happening quite significantly.
Well, another big decline today in Korean stocks as well. The Kospi down about 1.8%, closing again below 2,200 points. Only a couple of the biggest names were positive today. Those were related to electric vehicle batteries. Car makers Hyundai and Kia were leading the decline, though. Tell us about the domestic market.
Yes, if you look at the Korean market, it's down by 1.83% for Kospi and over 4% decline for Nasdaq. Clearly, this kind of decline is coming because we did see on Friday U.S. market falling sharply over 3% for Nasdaq, and also yesterday another 1% for Nasdaq. So clearly, tech-related sectors will be quite heavily affected, or the growth sectors. Korea being quite keenly related to the global economy, expected slowdown of the global economy is causing the continuation of decline for Korean market. However, though, if you look at the foreign investors, they're not selling, and the currency seems to be stabilizing somewhat in a sense that it is at 1435. We did see that number go up to 1440, as high as that. It did go down and then come back up again. But anyway, the volatility is there. But nevertheless, foreign investors think that buying at these kind of prices is reasonable. If you look at the foreigners, they bought about 200 billion won worth of Kospi. They sold slightly of the Nasdaq, but futures market they did buy also. I think that clearly what's happening here is that Korea's Kospi, or the Korean market, in terms of dollar terms, it is the worst performing country out of all the countries in global case. So therefore, that is causing the, people to look at Korea as an interest. We think that the valuation is at 0.8 times the book value, and also foreign investors-wise, level of the interest rate being this high, it is allowing the Korea's interest in terms of actually buying government bond at 5% interest rate at this kind of currency is quite attractive for foreign investors to enter. So we are seeing foreigners are coming into Korean market in some cases. We think that the level of decline in terms of the price is not going to be that significant in the future. We do need to look at some of the sectors that looks attractive on evaluations and this kind of currency level. A lot of the export-related companies will be showing quite reasonably good results in going forward. And therefore, we need to look at these sectors and try to develop alpha strategy, which is looking at sectors and companies that looks reasonably good in terms of the earnings.
Got it. All right, Mr. Yu, we'll leave it there for today. Thank you, as always, for coming on the program. We'll catch up with you again later on this week.
Thank you very much.